back to another day with Money, Finance, Freedom, your ticket to financial freedom. Today we're going to be talking about NIO, ticker symbol NIO. Easy enough. We're going to talk about why I don't believe it is necessarily a buy right now compared to the rest of the EV market. We're going to be looking into how their research and development, their overall stake in their own company, and their competition are proving to be reasons to not look at this as a growth company or a value company, but rather a risky company. Before we get into all that, make sure you guys go ahead and like and subscribe to this channel. Hit that alarm bell so that every time I post a new video, you get notified first. Okay guys, right into the video here. We're going to be talking about first, the fact that NIO is a battery as a service offering EV company, which makes them unique. This is the one draw towards NIO that I really like. They've brought down the price point of their cars by allowing you to basically lease your battery and replace it. A lot of companies don't have this ability, and if your battery goes bad, you might as well just replace your whole car. Now, the replaceable battery option is great for NIO, but let's talk about something. This isn't proprietary technology. This is something that they're actually buying from another company. They've just implemented it into their cars. What does that mean? That means that NIO and all of the other companies can be doing the exact same thing. So the one big draw that I love about NIO can just be adopted by companies like Tesla, BYD, Li Auto, XPEV. All of the other competition that it has can basically adopt this style. But we're going to notice that not all of them are going to. The reason being is all of these competitors have massive R&D. The research and development sectors of these companies takes up most of their profits. If we look into companies like Tesla, they're going to be putting in hundreds and hundreds of millions, if not billions of dollars into R&D over the next few years. We know that the EV race isn't just about coming up with the best looking car or the fastest car, but really it's a technology race. Coming up with autonomous vehicles, coming up with cars that not only have the most horsepower, the longest range, but are also light in weight. Being able to combine motors, which is Lucid Motors' best attraction right now, allows them to scale up or scale down the type of car you are buying. You can buy a high-end car that has 1,000 horsepower, or you can buy a much lower-end sedan that gets you where you need to go and gets you home, but you can still have what will be a luxury car. Now, if we look at NIO, we're going to see that over the past 12 months, the company has spent less than $400 million on R&D. Now, that is much lower than a lot of the other companies in its sector, including Tesla. We know that Tesla is constantly coming out with new technology, and they're focusing on autonomous driving. Now, we don't know when this is going to come out, but NIO is basically saying, we're going to focus on our service, our battery service, and we're not going to worry so much about autonomous driving. We're going to do a little R&D here, but it's not going to be the forefront of our company. What people are looking at when they're looking at EV companies is the future. So to say you want to be an EV company that doesn't care about the future does not bode well to your stockholders. This is why I believe we're going to see a slow decline in the NIO stock over the next few months. Now, interestingly enough, I don't think that NIO is going to go down forever. I actually think that their stock will go up. They have extremely high price targets on some of these financial analysis, but I don't think it's going to hit them. Do I believe NIO will go up over time? Absolutely. Most stocks do. But something interesting about their company is very little talked about. It is the fact that NIO itself only owns 90% of NIO. The reason being is that a few years back, they basically went bankrupt. They needed to find funding and they went out and got some money. In return for that money, they had to give up about a quarter of their company. They've slowly been buying back that portion of their company based on profits coming in from selling vehicles, but mainly from stock investment coming in. The rise in their stock and buying back their company has allowed them to now own 90%. What does this mean for you as a stockholder? As a stockholder, this means that you alone are only buying into 90% of NIO. You aren't actually getting a full 100% of the purchase. When we think about buying stocks, we're buying a stake in a company. So right now, you might have a small percentage stake in that company, but your percentage stake is actually part of another percentage stake. Now 90 is obviously a heavy majority, but if we look at a lot of other companies, they aren't in debt or loaning any money from any private equity holder. They own their companies. Most of them are actually getting subsidies. They're being supported by national governments, such as China and the US. They want the EV market to expand. That's why we've seen companies like Tesla get huge grants and subsidies in their marketplace so that they can produce their cars a little bit cheaper. By doing this, they build out the infrastructure for EV markets and overall help with the green ideals that are in most of these nations right now. We're also going to notice that NIO has a lot of competition. People are saying NIO could be the next Tesla. But Tesla is the next Tesla. Tesla might dominate the US market, but they're also slowly dominating the China market. As Tesla begins to grow in that market, they're going to be able to build relationships and produce their cars more cheaply for that sector. Now, China can prevent this. They can say, Tesla is a US-based company, and we're actually going to back China-based companies by giving them subsidies or putting embargoes on certain imports, such as Tesla, or such on the materials that are needed to create Tesla cars going out of their country. But that doesn't mean that NIO has a general advantage. Why is this? Because there's a bunch of other EV companies in China. We have companies such as Byton, BYD, BAIC, we have Li Auto, XBEV, Candy, all of these other companies that are slowly building their EV brands in China. Now, unless NIO can somehow absolutely dominate the market, we're most likely going to see what we see in the US and with the normal automotive industry. A bunch of companies all fighting for market share. Tesla is not doing that in the US. They have the market right now. They have all the attention, they have Elon, they have everything they need. NIO does not and will not have this. If you're in China and you want a top of the line EV car, you're going to buy a Tesla. Say you own a US brand vehicle, or you're going to buy one of the several other offerings that are already in China. If we look into BYD, or Build Your Dreams, we're going to notice that they have a unique advantage on NIO. They've been around a little bit longer and therefore have produced more vehicles. In 2019 alone, NIO produced 44,000 vehicles. This was a great milestone for them. A lot of investors saw this number as potential growth in the company, since it's a 113% growth in their year-over-year projections. Compare that to BYD though, and it's not as impressive. BYD produced 131,000 battery electric vehicles, BEVs, sold in 2020. So a side-by-side comparison shows that NIO doesn't have an advantage. Not only do they not have an advantage in technology, in market share, in sales, they don't even have it in designs. All of these companies have relatively similar electronic vehicle designs, and therefore, they're not setting themselves outside of the market. If we look at Lucid Motors, for example, they're setting themselves apart from Tesla by saying, we're a luxury vehicle. We're competing with Mercedes, Audi, BMW. Tesla, on the other hand, is trying to be the everyday sedan, something that everyone can afford. That's why they continue to cut costs on their lower-end sedans and their previous models. NIO, on the other hand, is just saying, we're another EV company. We just want to produce electronic vehicles through China. Now you can buy them wherever you want, but they're probably going to be about the same. Except maybe they're a little cheaper, because like we said, you can rent their batteries in the battery as a service industry. Overall, I do think that NIO is a great company. They might see some growth, but there are plenty of other competitors in the industry that might see more growth, that are more stable, and that we can invest in for the future and not be worried about risk. NIO has plenty of volatility. Every NIO day, we see their stock shoot up to the sky and then start to trickle back down, and we're still seeing that now. We're down in the low 50s to mid 50s as a stock price. We have projections at a low of $100 over the next few years and up to $900. How do you have a spread of about $900 for your stock? It's called volatility. It's called risk. It's not something I'm looking for. When I'm looking into a company, I'm looking at the overall fundamentals that they have, their market share, and then looking for things that are unique about them. What technology do they have? Do they have autonomous driving? What sets you apart from the rest of the market? And for me, NIO doesn't meet my needs. That's my general conclusion on this company, guys. Remember, this is not financial advice. Go out, do your own research. You can take this as a general opinion, what I think, but again, don't take it as financial advice. That's it for me, guys. Make sure you go ahead and like and subscribe. Hit that alarm bell so you get notified when we put out more videos like this. Thank you.